Bitcoin has plummeted to the low $62,000, marking its fourth consecutive day of losses. This sharp decline is not just a reaction to macroeconomic pressures, but signals deeper issues within the cryptocurrency market. Here's a detailed breakdown of what happened today. Looking ahead, the critical focus is whether Bitcoin can stabilize above the current support zone in the low $62,000. Recently, Bitcoin experienced significant volatility, largely driven by macroeconomic factors such as rising interest rates and increasing regulatory scrutiny. These elements have created a challenging environment for cryptocurrencies, prompting many investors to reassess their positions. The Federal Reserve's tightening monetary policy has raised concerns about the impact on risk assets, including digital currencies. If Bitcoin fails to maintain this level, we may witness further liquidations and accelerated selling from miners who often sell their holdings to cover operational costs. Historically, when Bitcoin dips below critical support levels, it often triggers a cascade effect, leading to heightened selling pressure across the market. Conversely, if the market can absorb this recent sell-off without triggering another wave of forced sales, it may signal a potential for a short-term bottoming process. This could provide a much-needed reprieve for traders seeking to re-enter the market at lower prices. However, should the stress deepen, we could expect broader weakness in altcoins, leading to a more defensive approach from traders. Altcoins often follow Bitcoin's lead, and a sustained decline could result in a loss of confidence across the entire cryptocurrency ecosystem. Institutional investors, who have recently shown increased interest in digital assets, may also adopt a more cautious stance, impacting liquidity and market dynamics. As we navigate these turbulent waters, it is essential to monitor market reactions closely. The interplay between Bitcoin's price movements and macroeconomic indicators will be crucial. In the coming days, the market's resilience will be tested, and the outcome could shape the trajectory of cryptocurrency investments for the foreseeable future. Traders should prepare for potential volatility as they reassess strategies in light of evolving market conditions. To understand the current predicament, we must look at the factors leading up to today's events. The immediate catalyst for Bitcoin's decline was the hawkish tone of the Federal Reserve's recent meeting. This meeting reinforced concerns that interest rates may remain high for an extended period, stifling investor sentiment across various asset classes, including cryptocurrencies. High interest rates often discourage risk-taking, driving investors to safer assets. This macroeconomic pressure coincided with specific stressors within the crypto market. The collapse of Strategy's preferred stock has raised alarms among investors, leading to fears of broader financial instability in linked assets. The interconnectedness of cryptocurrencies with traditional financial markets means that turmoil in one sector can quickly spill over into another. Additionally, many Bitcoin miners have been suffering due to extended periods of low prices, making their operations unprofitable. With energy costs rising and Bitcoin's value plummeting, these miners are now under significant economic strain. This financial distress is pushing some miners toward capitulation, which could further depress Bitcoin's price. The convergence of these macroeconomic factors and the internal fragility of the crypto market has created a perfect storm, resulting in the current downturn. The impact of this situation extends beyond individual investors. It raises questions about the sustainability of the cryptocurrency ecosystem itself. As investor confidence wanes, regulatory scrutiny is likely to increase, potentially leading to stricter compliance requirements for crypto firms. Looking ahead, the market must navigate these challenges while also considering the potential for innovation and resilience within the sector. If Bitcoin can stabilize and regain investor trust, it may pave the way for a recovery. However, the road ahead remains uncertain, with volatility expected to persist as stakeholders reassess their strategies in this evolving landscape. Bitcoin's recent price drop has sent ripples through the entire cryptocurrency market, highlighting its role as a pivotal liquidity anchor. When Bitcoin experiences a significant decline, it often triggers a broader risk-off sentiment among investors, leading to a sell-off in alternative cryptocurrencies or altcoins. This phenomenon is especially concerning at this juncture, as the market is witnessing the emergence of forced sellers. These are investors who, due to declining asset values, may be compelled to liquidate their holdings to cover losses or meet margin calls. The current economic landscape adds further complexity to this situation. Bitcoin miners, who play a crucial role in validating transactions and securing the network, are increasingly facing operational losses. Many are struggling to maintain profitability amid rising energy costs and declining Bitcoin prices, which often leads to reduced mining activity and, in some cases, the shutdown of operations. This downward pressure can exacerbate the selling trend, creating a feedback loop that drives prices even lower. If this forced selling accelerates, it could trigger a more pronounced downturn across altcoins and the broader cryptocurrency market. Investors should take heed of these developments, as a breach below critical support levels could signal a shift from a mere pullback to a full-scale de-risking scenario. Such a shift would have significant implications for funding conditions and could negatively impact exchange-traded fund (ETF) inflows, which are vital for institutional adoption of cryptocurrencies. For the average investor, these dynamics present a potentially rocky road ahead. Heightened volatility and uncertainty are likely to influence portfolios, leading to increased caution among both retail and institutional investors. The potential for a cascading effect, where declines in Bitcoin lead to broader market sell-offs, looms large. Looking forward, the market must brace for potentially turbulent times as investors reassess their positions and strategies in light of these developments. Monitoring key support levels and the behavior of forced sellers will be critical in determining whether the market can stabilize or if it will continue on a downward trajectory. This period of uncertainty may ultimately shape the future landscape of cryptocurrency investment, necessitating a careful approach from all market participants. In the last 24 hours, Bitcoin experienced a significant drop, falling approximately 2.5% to just below $62,400. This downturn extends a 4-day losing streak for the leading cryptocurrency, raising alarms among investors and traders alike. The sell-off initiated following the Federal Reserve's recent hawkish stance, which has led to increased concerns about prolonged restrictive rates. Such monetary policy can tighten liquidity and make riskier assets, including cryptocurrencies, less attractive to both institutional and retail investors. Additionally, a new narrative surrounding the collapse of Strategy's preferred stock has emerged, further shaking investor confidence and contributing to the overall market volatility. The anticipated capitulation of weaker Bitcoin miners, who may be forced to liquidate their holdings in a declining market, has compounded these fears significantly. According to Binance's market coverage, the combination of these factors has contributed to the sharp decline in Bitcoin's price. The implications of Bitcoin's fall are profound, as it serves as the main liquidity anchor in the crypto market. A sustained drop in Bitcoin could exert downward pressure on altcoins, which are often closely correlated with Bitcoin's price movements. As Bitcoin loses value, altcoins typically follow suit, leading to a broader market downturn that can affect even the most established projects. This relationship highlights the interconnectedness of the cryptocurrency ecosystem, where the fortunes of smaller projects can hinge on the performance of Bitcoin. Market sentiment is also at stake. A decline in Bitcoin can foster a negative atmosphere among traders, potentially leading to further sell-offs and a lack of investor interest in entering the market. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market remains uncertain. Analysts will closely monitor both the Federal Reserve's forthcoming decisions and the health of Bitcoin miners, as these factors could dictate market direction. If the bearish trend continues, we could see a more significant correction, prompting increased volatility. Conversely, should Bitcoin stabilize and regain momentum, it might provide a much-needed boost to the entire market. The launch of new products like the BNB ETF and Kraken's rollout of regulated perpetual futures could offer fresh opportunities. However, these developments may not be enough to counteract the prevailing bearish sentiment unless Bitcoin demonstrates resilience in the coming days. As Bitcoin's future hangs in the balance, what do you think will happen next? Will it stabilize, or will we see further declines? Share your thoughts in the comments and subscribe for more daily deep dives.